Hey all, welcome to ShareTreck. I'm your host Raj. Today I have a sad news to share, and that is the impending delisting of Invitae from New York Stock Exchange. I also have a word of caution about two companies, DNA and Bluebird. Let's get started. Welcome back, friends. Invitae is facing a challenging situation with the New York Stock Exchange announcing the initiation of proceedings to delist its common stock, ticker symbol NVTA, due to abnormally low price levels. The company's common stock trading has been suspended immediately, and it has the right to a review of this determination by a committee of board of directors of the exchange. Invitae, based in San Francisco and backed by the big SoftBank Group, is reportedly on the verge of filing for bankruptcy, grappling with a substantial $1.5 billion debt burden. And to navigate these financial challenges, the company has enlisted restructuring advisors from FTI Consulting and legal counsel from Kirkland and Ellis. In response to its precarious financial situation, Invitae has initiated strategic actions, including shedding assets and implementing cost-cutting measures. The company has actively explored various strategic options, and bankruptcy is being considered. Let me list some of their recent divestitures and cost-cutting initiatives. Invitae sold its non-invasive prenatal and carrier screening business to Natera, which is listed in NASDAQ NTRA, for $10 million, with additional potential milestone payments of up to $42.5 million, including cash and litigation-related credits. More recently, in December 2023, Invitae divested Citizens Assets, CIITIZEN, Citizens Assets, patient-centric consumer health tech platform, and announced strategic cost cuts, including a workforce reduction and other operating expense reductions. This is expected to result in annualized cash savings of approximately 90 to 100 million. And SoftBank, having invested $1.2 billion in convertible debt in 2021 to support Invitae's asset acquisition plans, remains a stakeholder in the company despite its financial struggles. Invitae's stock has experienced a dramatic decline with an 82% loss in the value over the past 12 months. This trends aligns with the challenges faced by industry counterpart 23andMe Holdings, reflecting broader difficulties within the genetic testing sectors. When we look at the last year, we lost SQZ Biotech in a similar manner after its shares fell below $1. Now we have Invitae likely to be delisted. To illustrate this point better, let us look at the price charts. Well, here is the price chart of Invitae. And as you can see, I had been warning about Invitae in the last few videos that it may get some action from the stock exchange. You can see the last day share price has fallen down to almost 8 cents. It's a big fall from where it was. So regardless of the share price of the company, however impressive it might be, you might end up catching a falling knife, and that's what has happened to most investors on Invitae right now. Now, I would like to showcase what we have here as the other suspects. Bluebird is already below $1, and Bluebird is in NASDAQ, and NASDAQ has given notices in the past, and one notable case is SQZ Biotech. So Bluebird is at 91 cents. This is another thing to watch. They have got great assets, but at the same time, this is the stock value. This is the valuation the market has given. And Bluebird may have to do something to improve its situation. There has been a marginal improvement in its value today, but it has to stay above $1. Next, we look at DNA, which flirted with almost $1, but bounced back. And it's doing slightly better today. But DNA needs to pick up a lot of value in order to stay in the stock exchange. They have to stay above $1. So those are the two companies I think we have to look at. And of course, somebody was asking me to cover Bionanogenomics. And I don't plan to put too much efforts on covering Bionanogenomics because it's almost on the verge of going into the sub-dollar range. So one of the things that we have to remember as investors is that just because a stock is cheap and we can buy a lot of that stock doesn't mean that it's a good stock. The stock is cheap for a particular reason. Either there's been tremendous equity dilution, or the future is really bleak and investors are bailing out of it. That's why the share becomes cheap. a share can only improve in price once the revenues and the EPS starts increasing and the book value starts improving. Otherwise, it's purely speculative. So don't chase cheaper stock is what I would say. That's my personal opinion, not financial advice. So that's what we have. But also, to be fair to all these companies, I would like to show you a table of our biotech sector where there has been a ton of layoffs. Let me show you the spreadsheet first and then we'll talk. So here is a spreadsheet that I compiled, collecting data from other places. So you can see for the whole year of 2023, there has been a whole lot of layoffs. And in January itself, we had around 16 layoffs, and February was worse than January. These are all 2023 I'm talking about. And then we had March, which was just like February. April, things got a little better. May also, things got a little better. June was also better, but July again saw a jump in the number of layoffs. August also saw equivalent to July. September was better, October was better, November and December were better. But we are looking at huge retrenchments. For example, Finch Therapeutics gave up 95% of its staff due to funding issues. And then we have another big number out here, 40% from Chimera Bioengineering, 84% from Magenta Therapeutics, which faced closure. In fact, Magenta was in tie-up, I think, with CRISPR Therapeutics to provide a conditioning agent, and that failed spectacularly in clinical trials and had to be shelved. As a result, we saw the closure of Magenta. So there is a whole lot of companies out here which were on really pioneering missions, and they had achieved quite a bit, but then they had to close. Because in this high interest environment, it's difficult to raise funding and risk taking is minimal. And you see Talaris Therapeutics, 95% reduction in staff. So things have been really bad for various companies across the board in biotech, including big ones like Bristol Myers Squibb, like BMS also had to let go of people. Johnson & Johnson had to let go of people, around 352 varied positions. But Johnson & Johnson is a really big company, and 342 is not that much when you look at Johnson & Johnson. Then we also have Bristol Myers, as I mentioned, letting go of 48 employees. That's not much for Bristol Myers. It's a small number. It's a tough environment, and in this tough environment, various companies are trying to do their best to balance all their options and priorities, and also be frugal on their spending. Well, what I would like to say is that what we can do with all this information is that we be more alert about Ginkgo Bioworks as well as Bluebird Bio. Because if the interest rate starts falling, I think these two companies will do very well. They will get a lot of relief, and especially Ginkgo Bioworks has got almost $1 billion of cash in its balance sheet, so it seems to be in a much better position. But Bluebird Bio is going to have some trouble. They have intellectual property which is valuable, but we don't know how these things are going to play out in a tight money environment. So I'm hoping that if Bluebird manages to survive until June, and we have the first interest rate cuts in June, then we can probably see Bluebird Bio coming up. So at this point of time, there is this bit of greedy element of buying as much of Bluebird shares as possible while the price is low, but that comes with a huge risk. Anything can go wrong. And one of the other aspects I want to highlight is that I think the political risk in US is slowly ramping down. We just had the verdict from the appeals court saying that Trump can be prosecuted. He may or may not appeal it to the Supreme Court, and the Supreme Court may or may not take it up. And the DC court will start proceedings, and we should have a result before the elections. And voters will be informed whether they are voting for a president who is innocent or a president who is convicted. And based on that, we might get a proper, well-thought verdict in the election. And that could reduce a lot of risk that the market would have priced in. So that can start to give us a little bit of relief once the deadline given by the appeals court to Donald Trump for making an appeal is exhausted. So I think Trump may appeal to the Supreme Court, and there is a good possibility that the Supreme Court would say that they do not want to take up the appeal because the appeals court has already given very convincing reasons and taken a proper decision. So that's my thought process. Any of you who isn't from US, you can put your conclusions, your thoughts in the comments below. So with that, my friends, I'd like to bring this video to an end. Thanks and have a great day. Bye for now.